All right, guys, welcome back to the channel. Huge 24 hours in the markets. We've seen the stock markets climb yet again. The nothing burger of the war has continued to play out. The wall of worry that we've discussed here on the channel for years on end continues to climb in the face of all the uncertainty, the wars, the tariffs, the Japanese yen carry trade fears, everything in the face of all of this stuff, the markets continue to climb. And as I film this video, you can see the stock market is also stretching, running up to new fresh highs. In the case of BTC, it is now within 6% of a new all-time high. It has run up since yesterday's fearful low, nearly or just over 8% from the low to the high. And it looks like we've now completed, in the process of completing, a nice balanced correction of two equal waves to the downside. More on that in today's video, along with the commodities, along with more on the Middle East, and of course, the details around the 18-year cycle as we run up into this peak with all the volatility going on in the world. Hit the like, subscribe to the channel. We also have a sale on TIA Premium this week. If you're serious about your trading and investing and want to take this a lot further than just trading in those altcoins, you've got a nice solid portfolio forming and you want to build this out for years to come. Link to that is in the video description, going live this week. Okay, starting with my investment theories. We're going to focus on the macro bull market here, looking at the stock market and the US dollar first up, then get into Bitcoin and altcoins, a recap of the news headlines. If you like this quick, succinct way of the news headlines, let me know in the comment section. I prefer it because the charts are the most important. The charts are where the truth lies. Okay, complete and total ceasefire. This is what Trump has called out on Twitter. And of course, his Truth Social. He did this before there was any ceasefire actually in place from Iran. They didn't even know this was going on. Israel-Iran latest. Donald Trump claims Israel and Iran have agreed to a ceasefire. But as you're watching the live updates coming through, basically Israel and Iran didn't even know that this was happening. Iran-backed Iraqi group says US attack will not pass without punishment. So on the back of that tweet of ceasefire, there was still attacks going on. Israel resumes bombing in Iran's capital, Gaza Strip. There was still more going on there from Israel. They're also Israel also occupying the West Bank and then shooting and killing people over there. So I'm not going to get too much into that because YouTube does not like that. You can go and read that for yourself on any of the news outlets. So hopefully this is actually going to occur. And of course, things can change minute by minute as they have done throughout the last 24 hours. But we're interested, and this is a big one that has just popped up on my alerts, the rise of the total three, your altcoins. Got more on that in a moment. But essentially looking here for BTC, a nice close here at 105,400-ish. The goal, 106,500, and that's our level that we're watching. This is fantastic news for the short term with Bitcoin, and it could develop into something bigger. These two moves to the downside were roughly $12,000 each. So the all-time high to the first low came in at 11,006, and then the next correction down top to low, 12,400. And the importance of this is that we've got now two balanced corrections. Two balanced corrections like this in a nice equal downtrend can lead to a short-term low, which then eventually turns into something more sustainable. Now, just as a recap from what we saw in 2024, this was this nice move to the downside, about 5 months to the low, and then another couple of months to get out of that low. We did see multiple significant low turning points. We had one on the 1st of May, which was a big liquidation event, meaning there was a lot of longs that got flushed out there. We also had another one here on the 5th of July, so another date that we're running into now. And you know, how would you like that in terms of dates? The 24th of June last year, so 12 months ago. It is now the 24th. Obviously, we just had the 23rd. That was also a very, very significant day for the markets. You had a pretty significant low, a little rally up, basically quite close to the previous low there in May, and then that final capitulation there into July, longer rally out into the peak of late July, and then another final capitulation in August. So some pretty significant capitulations throughout those 3 months. Now, the point here is, although the price and the time is lining up, we may have further events to test those lows, and that's only natural from the market. The beauty that we saw with each of these lows through 2024, and this is what we can use now moving into July and August, is that if we do get any more capitulations, those quick bounces out and closes above the swing low. So use your Gann Swing Pro here to show you where these swing lows are on the daily, on the 2-bar, and on the weekly chart as well. They are going to be your keys to identifying the strength and the weakness of those moves. So you can see here, that's the August week that collapsed. And then by the end of the week, you had a close above each of those lows. So a very, very strong move. A higher low formed, another higher low, and then things took off from there. And as I've talked about for this particular video, looking at time running out, so an update for the time frames here. Let's take it back to this chart. Our first targets were around July for a cycle peak. I don't think that is necessarily on the cards now. We're probably within 3 to 5 weeks. So in terms of the end points, we've got to look out towards Q3. So later in Q3, using our weekly time counts from each of the previous cycles. So this is where it gets a little bit more interesting here to forecast the end of the cycle. So each of the previous cycles, we had significant moves past the previous old all-time high. That's what this red line here represents, and here, and here. Now this is where we're at. So we're above the previous old cycle top quite convincingly now. And from that point, not a run up, correction, and then the final boom. Run up, correction, final boom. Run up, significant correction, final move. Wasn't necessarily a boom, but it was a final move into that top. And what we're doing here is counting the weeks until that final peak. Counting the weeks from that low, that's essentially the starting point there, to that final peak. And as we did with the 2013 move. So it was 21 weeks, 22 weeks, and 20 weeks, giving you an average of about 21 weeks. So we look at 21 weeks from the low we had in April, which was the tariff low, so quite a significant low, a very emotional event there. 21 weeks takes us out to the first week of September, which would definitely fall within the time frame of a 3-year move to the upside, and then look towards that bear market that has ensued every other time, roughly 1 year, taking out to 1 year in a couple of months like it happened in 2014, 2015. So 69 days left from today to get to that exact date. And of course, nothing is going to be exact. So we're looking at roughly 10 weeks from here, because the market has already done 10 weeks, 11 weeks completed into our 12th week now. So roughly about 9 to 10 weeks left until we get to the end of this move. At least the first time point to look out for any sort of significant blow off top move. We're into those final stages now. Of course, there are other things that can happen. We could extend this a little further out. There are other time counts we can watch. We'll worry about that later in Q3. But for now, we just got to take it one step at a time and watch for that next time frame. Obviously in Q3, July, August, September, really not that long to go now for Bitcoin. And if this is the case, we could potentially see further breakdown here for USDT and of course the total market caps as well in terms of climbing, not breaking down, but you want to see the stablecoin dominance break down, which means you're going to see more of that money flow out into altcoins and Bitcoin. Early days, some good signs here after a capitulation event, as we talked about in yesterday's video, and also looking at that altcoin market as it continues to fall. So let's bring all the traditional markets up to date after such a significant 24-hour move. You can see here for oil, it had broken out. It was all fears. People were talking about $100 a barrel, $200 a barrel if there was going to be a close of the strait there in Iran, like we talked about yesterday, and it didn't happen. Ceasefire, we've got now oil collapsing 17% in 1 day. That's 23 bars, so it's 23 hours, basically exactly 1 day there, 17% down, which is basically like an altcoin just collapsing from there. For the longer term, that's on an hourly chart. For the longer term, however, we're still seeing some support come in here on this very significant day above $65. So should that occur, should we continue to see support here at 65, that is another strong support continuing to form. As you can see, the rejection came 1, 2, 3 times at the $75, which was your 50% level of this entire roughly 2-year range. That's why it's so important to have those 50% levels on your chart to know where, or at least forecast where some of those important support and resistance levels can come in, so you can start to forecast out for your own trading and investing. Obviously, something we'd go into a lot more detail with TIA Premium to learn how to apply that to your trading and investing. So oil has come down. We've obviously seen the commodities index come down after putting in a new fresh high. But if this continues to hold, which of course we're going to follow up, then we're still above that 50% level at 535, and potentially at the start here, like you can see the green, attempting to put in some higher highs and higher lows, which could all be part of the next move to the upside. Now, a couple of interesting quotes, and I'll just leave us with one here for this part of the video. Beware of the investment activity that produces applause, basically a lot of noise. This is what Warren Buffett is saying. The great moves are usually greeted by yawns. What did we see yesterday? What did we see over the last couple of days? That was all applause. Applause meaning noise. A lot of, it could either be greed or it could be fear. I think that's what Warren Buffett is referring to here. Beware of the investment activity or trading activity, of course, that produces noise. When we see markets go up, or the way that long-term investors, seasoned traders, investors, they want to see the moves just continue to climb in their favor. They don't want to be there like altcoin degenerate gamblers hoping for big moves with a lot of excitement. The excitement in moves is where that move dies, whether it dies to the downside or it dies to the upside. And if it's going up and you're seeing a lot of applause, a lot of excitement, be very, very aware. That's the sort of thing you want to stay away from. You guys have mentioned that before on the channel, which is why you keep following. That was my segue into hit the like and subscribe to the channel. Hopefully it does help you remove the emotion from your trading, if nothing else. You're still going to do well if you can remove that emotion. So, Middle East tantrum turning into a real nothing burger. I've stuck by this the entire way since that first bomb went over from Israel. Of course, we've got to leave the emotions to the side. What happens with people's lives is awful. I'm glad that at least Trump has that going for him, that he definitely wants peace. I think that's something he's stuck by the entire time. But in terms of the market, again, a nothing burger. And it is showing yet again, I think we just had a new fresh high price, 6,113 points for the S&P 500. Yes, 4 points higher than the previous high there on the 16th, the next trading day after Israel bombed Iran on the Friday the 13th. So again, we've hit a new fresh high. Our 5-year cycle, which comes off the back of the COVID collapse, continues to grind out here. The view here is that it's just going to continue to grind through a trading range for the coming month through July, and then start to rise a little higher. Whether this breaks into a new fresh high is not the point here. We're just watching the cycle move. So basically the structure of the market. You can see with the red line, it runs up, it runs down, basically a bit of a churn here through Q3, getting into September, a little bit of a fresh high, and then it churns around again. So there could be a significant move coming up and then another churn. Looking at the NASDAQ, bringing this up to date as well, similar sort of thing, except it's on a much more steep grind to the upside. So essentially the market going up, nice solid run. You do see higher prices, breakouts of those previous tops. And for the NASDAQ, crazy enough right now, at the current price, it is within 1% of a new all-time high. So again, the nothing burger persists, the 18-year cycle persists, US stock markets continue higher, US real estate prices have continued to hold ground and continue to head higher, as is the economy at the moment. Looking forward into 2026 though, might be a different story beginning to form, and then looking out towards 2027, 2028, that's where the story unfolds. 2026, story changing. 2027, 2028, story unfolding. 2029, 2030, I think that's where we start to get into those deep feelings of that story that is beginning sort of now 2026, 2027. Okay, it's a long cycle. It takes time to unfold. The curve for June is continuing to work relatively well. So we looked at the 5-year cycle for S&P. This one here is looking at the 20 and the 60-year cycles. You've got your orange line in the back and the red line. Bit of a move to the downside for June, and then we start to rally out again for July. Okay, Bitcoin has closed the day now above the 50% here. I think we can retire this double top pattern as we've been covering now. We got to those levels, we got to 100%, so that was a good move there. And as this unfolded right here for the traders, I suggested that the market was less likely to come down and hit 93 to 95. So we'll retire this line. We still have our 50% in play at 93 in case the short term unfolds again, like I talked about earlier in the video, looking back at 2024 as an example, but the macro still held in there. The long term still held up. Just a couple of funny, interesting comments I've heard over the last month as this has unfolded. Some people are still suggesting that this is the end, this is the top, and it's all over and we're about to collapse. It's hard to say this close to the high, and I think many just want to try and call another top like they tried to call tops all the way up, but I don't think that's a great game to play. Essentially, the only time I'm looking at a significant break in terms of the macro trend is a break of these lows here at 74 to 76K. And the first sign of that would be a break of 93, which is where that support held up. Another thing still going for this macro bull market is the USDT dominance. We had a couple of days as it broke higher than 5%. As I said in yesterday's video, it got rejected at these previous tops at around 5.2%. And fortunately for us, this day has come through. A big breakdown here, break of 5%, and a nice low close as well at 4.87%. The next thing on its cards is to break 4.75%, and then the all-time support line, the 8-year all-time support line here, which is now climbing, sitting at, for today's reading, about 4.6%. So a break of that, and then it can finally test a couple of these lows spanning from 4.4 to 4.5. So basically every 0.1% on the way down once it breaks 4.75, basically 4.7, 4.6, 4.5, 4.4, it's got a long way to go. A bit of a tough ride here. So if you can get down over the coming weeks and then break this low, then we've got a bit of a clearer run towards the high threes. We break that low, that's when you can start to see that mega altcoin season and money flowing absolutely everywhere. The beauty about this is that you don't have to pick the exact low or the exact top of the market. USDT dominance combined here with USDC dominance is also showing that weakness. It hasn't broken down from the lows yet at 5%. We're still on this double bottom and double top play, basically a huge trading range here between 5 and 9%. That is also going to be pretty massive fireworks if it does break down from the lows here at around 5%. You could see it run down to 3.7, maybe even 3%. On the longer term, actually, I'll leave this till the end because this is some massive hopium. I'm going to leave that till the end. Let's go over to altcoins now. Total 3 is the 50% level. Over the last few days, broke underneath, and then just yesterday, one day above the 800 billion. That was the key level that we've been watching, and something that I have covered in great detail on that multi-year bear market for altcoins. We have only seen one day up. The excitement has begun to return. It is only one day up. And this is I think one of the most important quotes here. Shapiro says, the great thing about the market is that I can wait until there is a confirmation before taking the opposite position. So you don't have to try and buy the bottom tick or sell the top price. As I always say, you're just looking to take profits out of the middle. So a chunk of profits out of the middle. And if your entry signal is to take a long trade as it breaks significant highs, then take that trade. You don't have to try and buy this bottom or this bottom or this bottom or this bottom or that bottom or any of these other bottoms or any of these other tops, which basically happens throughout the way. Because eventually your entry price or your average price is probably going to be somewhere here or here anyway with how much you buy on the way up. So if your average price is basically around that other entry price, then it doesn't even matter. This is something that a lot of altcoin traders do not factor into their trading. They just think they've bought something at the low price When they look at their average price, then they realize that they haven't actually made that much money, even though the market has pumped hundreds of a percent. So don't be fooled with the crap that people put online. They often say that they've been buying the bottom, they possibly bought all the bottoms, they possibly bought all the tops, but the average price is the big one there. If they can figure out their average price, then maybe the gains weren't that great after all. But on a positive note, that's just looking at trading specifically. I know people get a little bit unwell when they hear about that. That's the raw maths of trading. So it's not my opinion, it's just the raw maths of the game, and that's how you're going to beat the game. The positive here, at least for the day, is that we've got to close above 800 billion. The 900 billion and 950 are still the marks that the total 3 needs to overcome for this money to flow out into the altcoin space. And so just to recap there, this you don't need to buy the bottom price or sell the top price. At the moment, you could be on the lowest risk, highest reward trade of your life. This could be the low here, but it could have been the low back here, back here, back here, back here. You get the idea. I don't need to go through it time and time again. So the game is really for the disciplined traders only, because if you are able to enter here, which is basically near the low, you need to have stops in. Like all these other people that don't put stops, they basically write it down and their average price ends up way, way higher. And they need to see the market come back hundreds of a percent before they even break even. So yeah, they might have the clout saying they bought a bottom tick and the bottom tick, but in terms of your bank account, that's where the real game is played. It's up to your bank account. Is your bank account going up a lot or a little bit for the work that you're putting into these markets? Okay, over to the altcoins before I get back to some of that hoping on BTC. Like, subscribe. Reminder again, the sale for TI Premium is on this week. Basically, what I'm going through with you here on the channel, especially with all that trading psychology, it's in a nice structured format there with long-term traders, long-term investors, setting out your plans for success in the future. That is going on sale in the next couple of days. Ethereum and altcoins. Yesterday, we saw ETH hit the 50% at $2,100. The reversal here has been very, very good for the price structure. Above 23 and now sitting on 24. So we've overcome the diagonal. That diagonal is basically the entire support line for the bull market. We've only been under it one other significant time before recovering. So only one day. I do like to see roughly 3 days above any of these critical support or resistance levels, depending on the direction of the market. And we're above a couple of these swing lows. So important swing lows here. One being at 2,300 and the other at 2,384. So a good start there to get back above the previous lows, which means this could have been just a fake out to the downside before a recovery. So ETH looking okay. Let's take a look at the other majors here against their USD values and their BTC values. SUI also coming off a nice bounce here, roughly around that 240 level. And the next levels are at $2.90 and $3. So they're both the 50% levels. The most significant 50% level is this entire range up at $2.91, which is also a swing low. So starting to consolidate above $2.90 or $3, it's going to be a great sign for SUI that this is potentially the higher low that has formed. So again, another good potential trade there. The great thing about market is that I can wait until there is confirmation before taking the position. That just means that if you've got confirmation that there is a higher chance that the price is going to go up rather than get rejected and keep falling, right? So SUI looks okay there. XRP got rejected again, weirdly enough, at this top price at around 230. So I think for the outset here, consolidating above 230 is pretty much the way to go for XRP. I'm not sure what happened yesterday. That's a bit weird. And then 250 is obviously the 50% level of this range. And let's take a look at Sol as well. Could be a little double bottom here at 126. The 50% level is at 151. Call it 152 for a round number. So some consolidation above there is going to be much better for Sol. But when you compare these against their BTC value, Sol's still looking like the weakest as it broke down yesterday. Yes, it closed above, but still below its 18,000 or 180,000 Satoshis, which is that previous top. Doesn't mean it can't go up. Just means that it might not have as much breathing room above it like something else. Maybe like SUI, if SUI can get above 4,000 Satoshis. A lot more breathing room above there for for SUI compared to SOL. There's a lot of work to do to get above all that previous resistance. It can happen, but it just means more work. XRP also broke down yesterday and just closed back above the 50%. So came through, tested that low, closed above. And you can see it has been rejected at 2160 multiple times after putting in support around that 2160 multiple times. So another critical level there for the short term for XRP. And the hopium that we've all been waiting for, here is Bitcoin on the longer term outlook with price extensions. This is your quote unquote price predictions, massive targets. And for some majority, they like to only look at prices and say they're going to sell at this exact target. That's not how this works. We're just looking for strength and weakness running into these price targets. Okay, the first one, of course, has to be around these tops here, 110 to 112. Then we look out to the 50% level at $117,000. Providing this is still the low, we're looking roughly around 117 for this 2-bar 1 week swing or 1 week 2-bar swing. Then we look out towards roughly the mid 130s and then roughly the mid 150s for an extension. So I'll come back to this in future videos, looking at that Elliott wave that we've been following throughout the entire cycle, which has done us very, very well. Should this be wave 1 into wave 2, wave 3 should be larger than this one right here, which means we should, in theory, go further than 136,000 to extend on this move, providing this is this last wave that we are in. Remember, all of the conditions have been met for this being roughly around the end of the cycle as well. And it is a moving target, but I'm on the side of the bulls still because of what I've talked about earlier. We haven't seen breakdowns of the mid-90s. We haven't seen the breakdowns of the mid-70s either. So we have to assume that the bull market is still on. We get the breakout of this level, as I've been talking about now for months, the overhead resistance, that one there for weeks, but this one here for months, which is essentially the same thing in reverse. It's your USDT dominance, that breakdown of the all-time support line. That is going to be what fuels the huge price moves to the upside. I like the hopium. Hit the like, subscribe to the channel. Which price target you think we're going to end with? Do you think it ends here at 112? Do we go to the 130s, 50s, or beyond? I'll see you guys back here at the next video. Thanks again for joining me. Until then, take care. Peace out.